Hello, everybody. My name is Megan Sather. I'm the personal financial counselor for the Vermont National Guard, and we are going to talk about the 2023 tax changes. So the taxes that you are going to file this year are 2023. Just a little caveat before we get into this, I do not do taxes. So this is merely information for you guys. I don't do taxes, but we are going to talk about resources about where you can get your taxes done. So let's get into it. We're going to talk a little bit today about the Inflation Reduction Act, talking about some clean car raises in some of the refundable credits that you can get for buying clean cars nowadays. Normal annual changes, which are usually the limits that you can contribute to specific accounts, are usually raised every year. So we're going to talk about the new limits for this year. And then we're going to talk a little bit about the future, because even today when we are recording this, they have still not passed all the laws that are going to affect your 2023 taxes. So what that means is don't not file your taxes. Just know that when these changes come through, and the biggest one is with the child tax credit, when these changes come through, the IRS is already set to make adjustments to everybody's taxes that is affected. So don't not file your taxes just because we're waiting for these new laws to be passed. So get your taxes in there and get them in the queue. So the Inflation Reduction Act, the things that we're going to hit on today, energy efficient home improvements, the credits that you are eligible for when you do some home improvements to your house, the credit residential clean energy property credit. We're really not going to talk a lot about that because that tends to go into the bigger ticket items like wind turbines and things like that. But it is part of the Inflation Reduction Act. And then we're going to talk about, I talked about those clean vehicles. So we're going to talk about buying a new clean vehicle and a used clean vehicle and some of the rebates that are available for both of those. So energy efficient home improvement credit revamped for the next 10 years, annual credit of up to $3,200 a year versus what used to be a lifetime credit. So now you can do this every single year and start doing some upgrades to your house. The credit is taken in the year that it's installed. You get up to 30% of a qualified expense is what you're going to get back. Qualified energy efficiency improvements installed during the year, and residential energy property expenditures. And we're going to talk a little bit about that. And a lot of that runs into this home energy audit. You can get a home energy audit, and I know that they do, Vermont does them online now where you can get an audit online. And they just have you walk through your house in a video. And so that's how they're doing these energy audits now. So you can get up to 30% of the cost of that, up to $150. So it's a great way, if you really don't know what needs to be done in your house and what should be upgraded, definitely the perfect place to start is with an energy audit. And that will give you the highlights of here's some of the things that you might want to consider replacing. So qualified energy efficient improvements, maximum credit of $1,200 for these specific improvements only. So exterior doors, 30% of the cost, up to $250 per door for a total of $500. Exterior windows and skylights, 30% of that cost, up to $600. And installation of air sealing materials or systems, you get up to 30% of those. And all of those three that we just listed for a total of $1,200 in credits each year. And then the other half of that is a maximum credit of $1,200 for bigger ticket items. So including labor, up to $600 for each item, again, the 30% threshold of things like central air conditioners, natural gas, propane, or oil water heaters, natural gas, propane, or oil furnaces, and hot water boilers, and then other electrical equipment. Maybe you need a new electrical panel. So things like that are all included in this $1,200 maximum credit. And like I said, every single year, you're now eligible to take these credits. Heat pumps and biomass, that is a separate limit of $2,000 outside of the other $2,400. Again, it's the 30% labor cost, but you can look at doing things like an electric and a natural gas heat pump or water heater, electric or natural gas heat pump, biomass stoves, and biomass boilers. So all of those have the separate credit up to $2,000 with 30%, including the labor that it costs to have those installed. So some of the things to think about, because we have all these limits, they're not big, huge numbers. So what you may want to look at doing is spanning some of these things over a couple years. Now that this isn't a lifetime credit, now that this is a every year credit, let's try doing some of these every single year. So doing some research just to make sure that what the products that you are installing do meet the requirements. And EnergyStar.gov is the best place to start, and it also has pictures. So you can go in and search the brand that you're looking at installing, and it's got pictures that'll tell you exactly which ones are included in this tax credit. Consider spreading the work over several years. So maybe you want to do your water heater, you just did that, and then maybe this year you want to do a new boiler. So that way you can spread it out and get the credit every single year. Credit is based on the install date. So like this suggested here, maybe you did a heat pump in November of last year, and then you want to do a water heater in January or March of this year. You should look at your own tax situation, and biggest thing is, do you have tax to offset this? This credit is what's called a non-refundable credit. So what that means is you need to owe money to be able to get this money back. So it's not going, if you normally get a $5,000 refund on your taxes, claiming these credits is not going to boost that refund. It really comes off taxes that are owed. So you want to make sure that you have some sort of tax offset because these are non-refundable credits. Then we move into cars. Clean cars, they're becoming a little easier to take in the bottom line. They used to be really, really expensive when they first came out, but they're now getting a little less expensive. So new clean cars, qualified plug-in EV or fuel cell electric vehicles. IRS has a list of eligible cars. Again, much easier to just go onto the website and make sure that the car that you're looking for is eligible. Fueleconomy.gov is the website where you'll be able to go in there and look at all of the eligible cars. There's a maximum credit of up to $7,500. Again, non-refundable, which means that you need to owe taxes to be able to get this credit. So it doesn't just get added on. And there's new rules for being able to have this credit. So the new rules are split into two different ways. So you may not be eligible for the full $7,500. Here's how they break it down. $3,750 is for meeting the critical minerals requirement. So meaning that the minerals that were used in that vehicle came from a specific region. And then $3,750 for the battery component requirements, which again means that those components came from a specific region. So you need to meet both of those requirements to be eligible for the maximum credit of $7,500. Only applies to purchases. Downside is if you lease a vehicle, you do not get this credit. It's only meant for people that are purchasing their vehicles. So, of course, it has rules and regulations for who can and cannot take this credit. There are AGI limits. There's always limits on income. Your adjusted gross income, which is your AGI. So $300,000 for married couples filing jointly, $225,000 for heads of household, and $150,000 for all other filers. And then the rules and regulations on the vehicle. They have a cap on the manufacturer's suggested retail price, the MSRP. So for vans, sport utility vehicles, and pickup trucks, they've set the limit for $80,000. Holy cow, that is a pretty big car payment right there. Anyways, so that's for your vans. And then for other vehicles, they've set it at $55,000. And so that is the limit that the manufacturer suggested retail price can be to be eligible for this new clean car. So maybe you want to go the more economical route and go used clean cars. So you can also get a credit for buying a used clean car, but there are a few more hoops you have to jump through, okay? So one, it has to be one of those qualifying vehicles. And again, you can go to that fueleconomy.gov website to be able to find out if the vehicle is eligible. You can get up to 30% of the sales price, up to a $4,000 credit. And then the AGI limits are a little lower than they are with the new car. So they're $150 for married filing jointly, $112.5 for heads of household, and then $75 for all other filers. So it is a little lower, but that's just because it's a used vehicle. So used clean car, more requirements for these used cars. So have a sale price of $25,000 or less, okay? So you can't be paying more than that for a used car. Have a model year of at least 2 years earlier than the calendar year when it's purchased. So really it just needs to be 3 years old. Not have already been transferred after August 16th, 2022 to a qualified buyer. So that means somebody else can't have already taken this credit. And you cannot have claimed another used clean vehicle in the last 3 years before the purchase date. Okay, so they do have a few more hoops that you have to jump through for the used clean vehicles. And that's just to make sure that they're just not getting this credit over and over again on the same vehicle. So brand new for 2024, dealers are able to submit the information to be able to get that $7,500 credit for the new vehicles. You can negotiate to have that taken off the price of the car before you buy it, which we're going to say right now ahead of time, there is a caveat to that. You need to make sure that you're eligible. So again, this is a non-refundable credit, which means you need to owe money to be eligible for this credit. So if you buy a new car and you say, tell the dealer, yes, I'm eligible, and the dealer gives you $7,500 off, and then you file your taxes and find out you're not eligible, you have to pay the IRS back that money. So you want to make sure that you are going to have a tax liability to be able to get the tax credits. The dealer is not required to make sure that you are eligible. It is all on you to make sure that you're eligible. So if you want to be on the safe side, buy the vehicle and do your taxes after. That way you're not going to be owing any of that credit back if you don't have a tax liability for that year. Okay, so just make sure, just because the dealer says it's a great idea does not always mean it's a good idea for you. You need to be looking out for yourself. So research before you walk into the dealership. Trust me, if you are thinking about buying a car, you should be doing lots of research, not just on this tax credit, but lots of research before you even walk in the door to buy a car. Get the details down before negotiating. So when you're negotiating the purchase price of this car, don't bring that $7,500 into it. Just ignore that altogether, and you need to negotiate the purchase of your price without that $7,500. Private sellers are at a disadvantage because they can't give you this credit. It's only eligible through dealers. Credit is non-refundable, like I mentioned, so you need to make sure that you have a tax liability to offset it, and the credit does not carry forward. So if you can only use a portion of it this year, it doesn't carry to the next year. So it's all or nothing. And like I said, the dealers are going to report everything to the IRS. So just because you're like, hey, I did it at the dealer, I don't need to file it on my taxes. Incorrect. The IRS is going to be notified by the dealer that you took that credit. So now we're going to get into these normal annual changes where they raise the contribution limits, or we hope they raise the contribution limits every single year. So we'll start off with TSP, 401k, 403Bs, and most 457 plans. Those are all employee contribution plans, meaning it's places that you contribute money to. And so they went up from 22.5 to 23, and then the catch-up limit still stayed the same at 7,500. So this year, 2024, you can put up to $23,000 into TSP. Unless you are over the age of 50, then you are eligible for the catch-up. And if you go into a tax-free hazardous duty zone, that limit for TSP goes up to 56,000. So definitely make sure that you know what your limits are so that you're contributing as much as you can and trying to get as close to those limits as possible. So Roth IRAs and traditional IRAs, the contribution limit increased to $7,000. $8,000 if you are 50 years or older, you get $1,000 additional catch-up. And then IRA contribution limits can be phased out based on your AGI, which really means they just have income limits for who can contribute to individual retirement accounts. And they phase it out the more money that you make. Normal changes for health savings accounts. So maybe you have a high deductible medical plan with your civilian job and you have a health savings account. They've raised the limits to $4,150 for self only and then $8,300 for a family. And then the limits are increased by $1,000 for anybody age 55 and older that's contributing to the health savings account. Other normal changes, the standard deduction went up from 23 for single, it went 13,850 to 14,600. It's a pretty good jump for everybody. Married filing jointly, married filing singly, everybody's normal standard deduction went up. Normal annual changes into education accounts. If you're going to be contributing to a education account, maybe it's a Coverdale Education Savings Account. The limit on that is $2,000 per student per year for 2023 and 2024. The income limits on that is $220,000 for married filing jointly and $110,000 for others. 529 contribution limits went up. It usually mirrors whatever the annual gift tax exclusion is, which for this year, for 2023 is $18,000. State law may determine whether or not it's deductible, so it's really based on each state as to how much of that is deductible because 529s are state run. But the great thing about 529 plans is that you can preload them, which means that you can contribute up to 5 years. So $90,000. And if you've got 2 grandparents, you can do up to $180,000. So you can really get some serious cash put into a 529 plan to help for your kids' education. And 529s are not just for like a 4-year university. They've really changed a lot of the rules on what you can use them for. And you can use them for tech schools. You can use them to pay for student loans. And they've now got an option where if you don't end up having to use the 529 for education, you can also use it for an IRA. So they're really trying to make the 529s user-friendly. So that you're not stuck with it. Because, hey, you've been contributing for 18 years and your kid gets a full ride scholarship and you're like, what do we do with this money? So at least now they're giving you some more options of what you can do with the 529 money. The gift and estate tax, for those of you that were very worried about what was going to happen, they have raised the lifetime estate tax exemption to $13.61 million. So if you were running pretty close and, last year it was 12.92, if you were thinking you were going to be in trouble, well, they have raised it. The annual gift tax exclusion, like I said, is $18,000 for this year. And what that means is you can give $18,000 to anybody cash and they do not have to pay taxes on that money. So every year they do it, they usually raise it up every year. And so for 2024, it's $18,000. Anybody wants to give me $18,000, I'm all over it. Miscellaneous taxes are due April 15th, unless you live in Maine and Massachusetts, where I guess you need a little extra time. And you get to wait until April 17th to file your taxes. Extensions are great. If you know you're not going to get everything together in time, you can file an extension, but you need to realize that's an extension to file, not to pay. So you still need to pay. If you owe money, you still need to pay some money on April 15th. So that doesn't stop you from owing the money, okay? Just know that that gives you a little extra time to get all your paperwork together. Let's talk a little bit about the future. 2026 is coming. We've got some taxes that are going to sunset. And what that just means is that some of the tax rates are going to go up. The standard deduction is going to be cut in half. Child tax credit will revert to the $1,000, and exemptions would return to $5,000 per person. And tax-free treatment for student loan forgiveness, $10,000 limit on itemizing state and local taxes would end. And the AMT exemption amounts will radically cause more minimum taxes to be assessed. So these are 2026 when these are going to be coming in. So we're still looking at the future. These are not so fun numbers to think about in the future. So they have released some information about, one, the fact that Medicare is going to go bankrupt in 2031. And Social Security is supposed to have the trust fund depleted in 2034. So I can honestly say I don't think Social Security is going to go away, but they do say that if things don't change or there aren't some new laws, that they may be decreasing Social Security and what you're eligible for. So when we do our retirement planning, we definitely don't want Social Security to be the only income that we're trying to live on, because it may not be the number that you are seeing on your statements right now. Current tax rates are historically low. And tax rates could rise to cover benefit shortfalls. It's definitely one of the options that they are looking at to figure out how to get the cash infusion that they need into these two programs before they go bankrupt. The child tax credit, at the moment, it is still being voted on. So it is past one hurdle and it is on to the second one. But this is the one that I said in the beginning. Even if you might be affected by the child tax credit changes, don't not file your taxes, okay? Just file your taxes. And like I said, the IRS will take care of it if things change. So the way it stands right now, the child tax credit is $2,000 per child that meet the criteria, being related, living with you, age, and support. $1,600 of that is refundable for 2023. Earned income, you have to have earned income over $2,500, and 15% for the 15% for the refundable portion is what you get. So income over $2,500, you get 15% of that for the refunded portion of your child tax credit up to the $1,600. 2 kids, so just to look at some numbers, 2 kids, $3,200 refundable, $23,000 in earned income to get the full amount, okay, which is a relatively low number. And so that's what the child tax credit was set up to help, is lower income families to be able to have more spending power. So what they're looking at, the child tax credit that is being proposed at the moment, is still the $2,000 per child that meets the requirement, but $1,800 of this would be refundable for 2023, $1,900 for 24, and $2,000 for 25. So they're talking about raising it every single year. Earned income over the $2,500 and the 15% then by the number of children for refundable. 2 kids, $3,200 refundable, so the income is $13,167. is the earned income that you need to get the full amount. And if you'll remember from that slide before, that is a much smaller earned income required. So that's what the new law is supposed to be changing things to if it gets voted on and passed. And like I said, it's going to be retroactive through 2023. So the IRS will make those changes if you are eligible for a different amount than what you've filed for now. That was just a basic overview of taxes. This is my contact information. Like I said, I don't do taxes, so I would refer you to the experts to have your taxes done. But you do have some resources out there. The Volunteer Income Tax Assistance, VITA program, is run in the community. It's run nationwide. Most of it's in the United Way. There are some action groups that also do VITA, but it is there to help you in your town, and they are all trained by the IRS. So there's my contact information. If you have any questions or information you want from me, let me know.
The preceding content does not constitute endorsement by the Department of the U.S. Army, U.S. Air Force, Vermont National Guard, or Vermont Military Family Programs of the organization's products and services contained therein. Further, the Vermont Military Family Programs assumes no responsibility for the consequences of using the products or services provided by the organizations or resources listed. Vermont Military Family Programs makes every effort to present our clients with reputable resources. We cannot guarantee the validity of said resources, and the use of such resources is voluntary.